I think this cycle it ends up at 10 trillion on its way to 100 trillion, 200 trillion. That is a big fucking mega trend. This massive trend is the reason I have this t-shirt. The t-shirt is don't fuck this up. And don't fuck this up is we are being given the gift. We need to take the gift. And the game is not to lose your tokens and not to do stupid stuff and not make money. I don't want people coming to complain they debased our currency and we didn't make money from it. We got poorer. No, you've got the opportunity. Take it.
As time goes by, global monetary systems are deteriorating. Currencies are debasing. Inflation is rising. Meanwhile, Bitcoin has been making the headlines as the top-performing asset in history, outperforming traditional assets like stocks, bonds, and commodities by a wide margin. This is what Raoul Pal, CEO of Real Vision, wants all of us to keep in mind in his latest podcast. To him, this is the opportunity of a lifetime that we do not want to miss. Let us now watch clips of Raoul Pal as he explains exactly why this cycle will be massive, while also discussing the existing challenges in our current system that we must become aware of. Be sure to stay through the end of the video, where Raoul Pal explains why crypto is our key to a more secure future. While watching, kindly give this video a like, subscribe to the channel, and turn on post notifications for more similar content. Thanks and enjoy.
The central banks are understanding that we've hit the debt limit globally from all the major governments, and their main job is to do one thing, and that's debase currency over time. It's called financial repression. And the idea is you debase currency so the value of your debt goes down. And also the value of assets optically rises, so the collateral, which is that base layer to any lending economy, is protected. Because if you lose the collateral that happened in the housing market in 2008, what happens is the whole house of cards comes down. So there's one game in town, and that's the Fed, the BOJ in Japan, the PBOC in China, the European Central Bank, the Bank of England, Bank of Canada. Everyone's doing the same thing. And the aging populations exacerbate this because that has all the savings pools, so they can't let those people go bust either. That debasement has optically forced asset prices to rise. So what's really interesting, and again, I've talked about this at length before, is if you divide the S&P 500 by the Fed balance sheet or the GMI Global Liquidity Index, what you find is the S&P 500 has gone nowhere since 2008. And nor has gold, nor has real estate, nor have global equities. I mean, basically all assets have gone nowhere. And that's the world we all kind of feel like we're living in. Yet we see these equity markets rising. And we're like, well, my income's not rising. How the hell's this going on? My business isn't booming. Sure, some businesses are booming, but most aren't. And that's the magic of debasement. It kind of is a wealth tax on you and you don't really realize it. So your wages don't rise, costs of asset keep going up. Within that whole process of understanding the everything code, I did divide pretty much every major asset in the world. I was using gold and copper, everything, just like what outperforms the Fed balance sheet? Where do you put wealth? Now, most of these equities, S&P 500, for example, basically holds its value. So you're not getting worse off for that, but they're going up more than your wages, so you can afford less of them. So that doesn't help your future self because an asset is just future deferred consumption. But when I looked at the NASDAQ, it was like in a straight line up versus the balance sheets. And it was outperforming debasement. And that got me down the route of the exponential age, understanding that technology is a mega secular trend. But beyond that is the ludicrous trend of crypto.
From what Pal said, currency devaluation is a strategy used by central banks to protect lending economies by reducing the value of debt, preventing a collapse similar to that of the 2008 housing market crisis. It artificially boosts asset prices to stabilize the financial system. Meanwhile, there is great potential in technology and cryptocurrency, as Raoul Pal highlights their disruptive impact on finance. Let us now return to the podcast as he explains the true value of cryptocurrencies like Bitcoin.
Crypto, and I've talked about this from every angle to try and get people to understand, is a life raft out of debasement. It's a new financial system being built. It's an entire network of the Internet of Value that we get to own a fractionalized share of, whichever country we're in. It's the same globally homogenous product. Everywhere in the world, we all have an equal chance of putting 10% of our paycheck in this massively fast-growing asset. It's the fastest growing asset class of all time in terms of number of people using it. It's the second fastest growing technology in history, only just been bettered by AI recently, but beyond that, it's faster than the internet. And it's like owning a share of the internet. That's the magnitude of what it is. It's currently a $2 trillion, $2.7 trillion market. I think this cycle it ends up at 10 trillion on its way to 100 trillion, 200 trillion. That is a big fucking mega trend. With the debasement of currency, the adoption of a new system, and the fact that it's a life raft from the old system, that creates this supermassive black hole that sucks in capital. And it outperforms everything. It's the biggest macro trend and bet of all time, which is why I dedicate so much of my time to it. And on a risk-adjusted basis, it outperforms every asset. It's like an alien asset class. There's just literally nothing we've ever had before has had this performance with this little risk, even though it goes up and down. It's like 70 or 80% on the downside and then up, 10x on the upside. Still, on a risk-adjusted basis, it's the best risk-adjusted asset in the world. I mean, Urian Timmer from Fidelity produced an amazing chart which shows all of the risk-adjusted assets and then Bitcoin at the top right. Like it completely doesn't exist in the same framework as anything else. This massive trend is the reason I have this t-shirt. The t-shirt is "Don't fuck this up." And "Don't fuck this up" is we are being given the gift. We need to take the gift. And the game is not to lose your tokens and not to do stupid stuff and not make money. I don't want people coming to complain they debased our currency and we didn't make money from it. We got poorer. No, you've got the opportunity. Take it.
According to a report from CryptoQuant, the current supply of Bitcoin available for sale is expected to last for 6 to 12 months, given the rising demand. This imbalance between demand and available supply could drive Bitcoin's price higher. The demand for Bitcoin has significantly increased, with monthly demand rising from 40,000 BTC to 213,000 BTC. This demand is driven by factors such as the introduction of Bitcoin exchange-traded funds and increased holdings by large investors, or whales. The total balance of Bitcoin held by whales has reached its highest level ever. At the same time, the supply of Bitcoin available for sale is declining. The amount of Bitcoin held by entities available for sale has decreased from its peak in March 2020. These entities include cryptocurrency exchanges, over-the-counter desks, miners, and seized Bitcoin held by the US government. Additionally, the holdings of Grayscale's GBTC Bitcoin Trust are considered part of the sell-side liquidity, further reducing available supply. As demand continues to outpace supply, the available supply of Bitcoin relative to monthly demand has reached its lowest level ever. The report suggests that the current supply of Bitcoin available for sale may only meet demand for 12 months, and remove Bitcoin held by exchanges outside the US would further reduce this inventory to 6 months. When demand becomes greater than supply, it typically leads to upward pressure on prices. With more investors seeking to buy Bitcoin and fewer coins available for sale, more buyers would likely be willing to pay higher prices to acquire Bitcoin, especially now that it has been made accessible to large institutions through Bitcoin ETFs. Meanwhile, in a recent YouTube video, Rekt Capital provides an analysis of the Bitcoin halving phases, comparing the upcoming 2024 cycle with those of 2020 and 2016. The analysis sheds light on the different stages leading up to the halving event and their impact on Bitcoin's price movements. The pre-halving downside phase, characterized by a pullback in Bitcoin price, has been observed in previous cycles as well. This is followed by the pre-halving rally phase, marked by new all-time highs in Bitcoin price. Historical trends indicate that the pre-halving rally typically begins around 60 days before the halving event, leading to a surge in Bitcoin price. However, a recent retrace of approximately 18% suggests a transition from the pre-halving rally to the last pre-halving retrace phase. During this phase, there is typically a pullback in Bitcoin price, with the depth ranging from around 19% in 2020 to 29% in 2016. The recent pullback, similar to previous cycles, suggests that Bitcoin may be borrowing elements from different periods. Robert Kiyosaki's statement also affirms the significance of the halving event, prompting him to invest promptly in Bitcoin. He advocates for purchasing Bitcoin, even in fractions, citing the potential for appreciation in value post-halving. Kiyosaki's bullish outlook aligns with his expectation of the Bitcoin price reaching $100,000 by September 2024, highlighting his confidence in Bitcoin's long-term prospects. Bitwise CEO Hunter Horsley has also provided valuable insights into the massive financial implications of the 2024 Bitcoin halving. Horsley projected a substantial impact on the market, with the daily reduction in supply exceeding $32 million and an annual reduction surpassing $11 billion leading up to the 2024 halving. Horsley's analysis suggests that the combination of a larger reduction in supply and rising demand for Bitcoin could lead to a more pronounced effect on the market, potentially contributing to a surge in Bitcoin's price following the halving. With the Bitcoin price hovering near $70,000 and analysts providing bullish outlooks for its future, there is much anticipation of significant developments in the Bitcoin market post-halving. As Bitcoin continues to capture mainstream attention and adoption, its price trajectory remains an area of keen interest for investors and enthusiasts alike. Considering the insights given by Raoul and other seasoned analysts, what is your opinion on how cryptocurrency, specifically Bitcoin, can help tackle the problems caused by currency devaluation and inflation? Do you think Bitcoin's ability to perform better than traditional assets makes it a worthwhile investment option? Or do you have concerns about its ability to sustain its value over the long term? Feel free to drop your thoughts and analyses in the comments below. If you found today's video enlightening and want to stay ahead with more insights and updates on crypto and global finance, make sure to hit the like button, subscribe to our channel, and turn on post notifications. Your support greatly encourages us to continue providing in-depth content and discussions. Stay tuned for our next episode, where we'll uncover more about the fascinating developments in the cryptocurrency space. Until then, keep questioning, keep exploring, and most importantly, keep investing wisely. Thank you for watching, and we'll see you in the next video.